Welcome to Talk Tickers. We dive into earnings calls to pull out the insights you need.
That's right. Today we're unpacking the Coca-Cola HBC Q1 2025 trading update.
We'll break down their performance, what's driving it, and what the outlook is shaping up to be.
Okay, so first impressions. Q1 looked pretty solid. Strong momentum.
Yeah, definitely good revenue growth.
And that came from both decent volume momentum and also expanding revenue per case.
Plus, they gain more value share, about 130 basis points in non-alcoholic ready-to-drink.
Which all seems to feed into them sticking with their 2025 guidance from back in February. So, confidence there.
Okay, let's dig into the numbers a bit more. Organic revenue up 10.6%. That's quite strong.
It is. And you see volume contributing up 1.8%. But the real kicker was revenue per unit case. That jumped 8.7%.
Reported revenue was also up 8.7%, even with some FX headwinds, though maybe not as bad as last year.
Exactly. The currency impact was there, but less severe than in 2024.
So that revenue per case increase, how did they manage that? Was it just price hikes?
Well, it's more nuanced than that. It's a mix. Price, definitely, but also category and package mix played a part.
Ah, okay. So targeted pricing.
Yeah, they talked about a segmented approach, looking at inflation, currency, the competitive scene, regulations. It varies market by market.
Right. Like in Africa, where inflation's high, pricing was probably a bigger driver.
Definitely. Whereas in Europe, with lower inflation, maybe less so on the pricing front.
And the mix side.
Improved category and package mix. They mentioned total single-serve mix was up 50 basis points. So more people buying those smaller, often higher margin formats.
Interesting. So it's a balance pushing affordability with smaller packs and promos, but also going premium in places.
Precisely. That Nigeria premiumization initiative is a great example.
Tell me more about that. Sounds specific.
Very. They're targeting affluent urban consumers in certain cities there, using custom-built segmentation for outlets in cities.
Wow, down to the outlet level.
Yeah, very granular. Then they activate their premium stuff cans, energy drinks, Schweppes, juice in those specific spots. Hyper-personalized marketing, too.
And is it working?
Early signs are good. Schweppes volumes grew mid-teens in Q1 in Nigeria. So, yeah, seems to be paying off.
It really highlights how data is driving these strategies now.
Absolutely. And they're doing something similar with HRA hotels, restaurants, cafes.
Yeah.
Data-driven segmentation to offer the right premium products to each client.
Makes sense. Okay, let's switch gears to categories. How did sparkling do?
Pretty resilient. Volumes up 1.1%. Trademark Coke grew low single digits.
And Coke Zero, usually a strong performer.
Still is. High single-digit growth for Coke Zero. They're also pushing those Coke and Meals campaigns everywhere.
Oh, and they're bringing back Share Coke. Haven't seen that in ages.
Over 10 years, apparently. Relaunching it now, expected to run through the summer. Probably with a bigger digital angle this time around.
Right, times have changed. What about energy drinks? That's been a hot category.
Red hot, yeah. Volumes up over 25%. And that's on top of tough comparisons from last year when they launched Monster Green Zero Sugar.
Wow, over 25%. How?
Continued distribution gains for Monster, launching new stuff like Rio Punch in 10 markets. And local marketing, like using those Chelsea Football Club partnerships for Predator and Fury in Nigeria and Egypt, both saw strong double-digit growth.
So really firing on all cylinders in energy. Now, coffee, I heard there was a strategic shift.
Big shift. They're really prioritizing the out-of-home channel. Now think Costa Coffee partnership, aiming for sustainable, profitable growth there.
Okay, so focusing on cafes, restaurants.
Exactly. And it's working there. Out-of-home volume jumped 19%.
But
it means pulling back from the at-home coffee market. So total coffee volumes were actually down 8% in Q1 because of that shift.
So short-term hit for a longer-term gain.
That seems to be the plan. They sound positive about the long-term outlook for coffee, focusing on that higher margin out-of-home business.
Got it. What about other drinks? Stills.
Stills grew 2.1%. Water was mid-single digits. Sports drinks, low teens.
Sports drinks doing well, leveraging partnerships.
Yeah, global and local ones. Running events, the FIFA Club's World Cup for Powerade, things like that.
And premium spirits.
Good start to the year there, too. Newfoundlandia campaign launched Barty and Coke, ready to drink in 8 markets.
Okay. Let's touch on sustainability quickly. Anything notable?
Yeah, focus on packaging circularity. Deposit return schemes, DRS, are live in 9 markets now, with 2 more coming this year. Austria just launched in January, apparently with encouraging results.
And in Nigeria,
they launched the first Coca-Cola system-owned packaging collection facility there. Can handle up to 13,000 tons of plastic bottles a year. Significant investment.
Okay. How did things look segment by segment? Established markets.
Net sales revenue up 2.1%. Volumes were broadly flat, though. Growth came from price mix, low single digit.
What drove the growth there?
Good performance from Coke Zero, energy, sports drinks, premium spirits. But they did mention fewer selling days, and the later Easter had an impact.
Right, the calendar effect. Developing markets.
Net sales revenue up 4.6%, mostly led by price per case. Volumes were actually down 2.5%, again, hit by those fewer selling days and Easter timing.
Any country standouts or laggards?
Hungary and Czech Republic saw good volume growth. Poland declined, but they were up against tough comps from last year. Again, Coke Zero, energy, sports drinks, premium spirits performed well.
And the big one, emerging markets.
Huge organic revenue growth, 20.3%.
Wow. Driven by?
Mostly revenue per case expansion.
Yeah.
Think weaker currencies, high inflation, especially in Nigeria and Egypt. But despite that volatility, volume still grew 3.5%.
Strong performance there, particularly from energy and Coke Zero again.
Definitely. Shows they can manage pricing and volume even in tough spots.
So looking ahead for 2025, outlook.
They expect things to stay challenging. Macroeconomic, geopolitical uncertainty isn't going away.
But they seem confident.
Yeah, they express confidence, pointed to their 24/7 portfolio, their BPO capabilities, customer partnerships, their people. They feel equipped to navigate it.
And the guidance.
Reaffirmed. Still targeting that 6-8% top-line growth for the year. On track, they say.
Okay, let's jump into some Q&A highlights. Anything interesting on Italy? It seemed a bit soft and established.
Yeah, they said Italy was hit by the fewer selling days and later Easter in Q1, but underlying performance was solid, in line with their expectations. Strong focus on food occasions like pizza pairings. Share trends in sparkling looked good. They said Q2 trading was tracking as expected.
What about that coffee strategy timeline? When do they expect total coffee volumes to grow again after this shift?
It's a multi-quarter thing, they said. Cycling out those at-home volumes takes time. After that, they expect total coffee to grow, driven by that profitable out-of-home segment.
That Nigeria premiumization initiative. Any plans to expand it?
They suggested it has potential to scale, maybe across other Hellenic markets or even the broader Coke system. Their better data and analytics capabilities make it possible.
And how's the consumer holding up generally?
They describe the consumer environment as stable, pretty consistent with recent periods. Still focusing on that dual approach, affordability where needed, premiumization where possible.
Do they quantify the Easter and selling day impact?
Yeah, roughly. For the group, the volume headwind was less than 50 basis points from Easter. For established and developing, maybe around 100 basis points. The 2 fewer selling days were a bigger hit, about 300 basis points volume headwind overall.
Oof. But they expect to get that back.
Expect to recapture in Q2, yeah. Still anticipating low single-digit volume growth for the full year.
And despite that Q1 noise, still comfortable with the 6-8% top-line guidance for the year.
Yes. They stressed Q1 as their smallest quarter. Lots of volatility still out there. Key trading periods ahead. But yeah, comfortable with the guidance for now.
How is the new Share a Coke campaign different from the one 10 years ago?
More digital, basically. Leverages digital tools and platforms much more. They expect it to drive both brand equity and, actual transactions.
Makes sense. What were the main drivers of revenue per case in Q1 specifically? Price or mix?
Primarily pricing in Q1. A lot of that was carryover from actions taken in 2024, especially in emerging markets. Also some legislation impacts and input cost inflation. But mix held 2 positive category mix from energy and premium spirits and that positive pack mix from single serves.
Going forward, still expect price mix to drive growth.
Yes, but probably with a lower contribution from pricing as that carryover effect fades. Volume expected to grow low single digit.
Are retailers getting behind Share a Coke?
Standard practice, they said. Planning promotions, getting display space secured with customers. The campaign should also support their focus on single-serve mix.
Italy sugar tax.
Yeah.
When's that hitting, and how are they handling it?
Expected July 1st. They're prepared to pass on the cost. They anticipate a temporary short-term impact, but don't see it as a long-term barrier. Apparently, the tax is less aggressive than in some other markets, maybe an 8-11% price increase hitting everyone.
You mentioned the strong revenue per case in emerging, partly offsetting FX in Nigeria and Egypt. How are they managing that recovery?
Right, that plus 16.2% revenue per case in emerging benefited a lot from 2024 pricing carryover. They described a phased approach to pricing there, reacting to FX and inflation carefully to minimize market disruption while still aiming for volume growth.
Any lingering impact from the boycotts in Egypt?
They said Q1 performance was solid. They're now cycling tougher boycott comparisons from Q1 last year, so the impact is lessening. Seeing a good recovery in sparkling, led by Coke. Driven by locally relevant marketing and strong execution, they're actually gaining share in Egypt now.
Okay, great detail there. Now let's move to our segment. This is not financial advice. Time for some outrageous but plausible trade ideas based on what we've heard. You go first.
All right, how about this? Long Coca-Cola HBC, short a major coffee roaster. The idea is CCH's pivot to higher margin out-of-home coffee using their amazing distribution lets them grab share. Meanwhile, traditional roasters, heavily reliant on the potentially tougher at-home market, could feel the pinch.
Interesting play on that coffee strategy shift. Okay, remember everyone, this is purely a thought experiment, not financial advice. Do your own research.
Absolutely.
My turn, okay. Long CCH's Nigerian premiumization efforts. Short, a broad Nigerian consumer discretionary ETF.
Ooh, explain that one.
Well, their super focused, data-driven strategy targeting affluent Nigerians with premium drinks could really outperform, right? Even if the overall Nigerian consumer discretionary sector faces headwinds, it's like betting on a specific, potentially insulated growth pocket.
A very targeted bet. Again, folks, not financial advice. Consider your risk tolerance, do your homework.
Definitely. So, wrapping up, Coca-Cola HBC is showing resilience, adapting strategically. Strong Q1 driven by smart pricing, mix management, and particularly those energy drinks.
Yeah, and key things to watch going forward are that Nigeria premiumization push and how the revamped share of Coke lands with consumers today.
Plus that coffee pivot, the short-term volume dip versus the potential long-term profit boost. It's a fascinating balancing act.
And despite all the uncertainty out there, sticking to their guidance signals real confidence from management.
So a final thought for you listening. What do you make of that very targeted premiumization strategy in emerging markets like Nigeria? Could that be a blueprint for others? And how do you see that coffee strategy evolving over the next couple of years? Lots to chew on there.